Today, we expose something happening on streets across Britain that nobody in government, nobody at the major property portals, and certainly nobody at the big estate agency chains wants to admit out loud. Across 15 specific UK suburbs, most of them in southern England, most of them in commuter belts, and most of them places that were considered safe property bets just 3 years ago, the supply of homes for sale has exploded to levels not seen in over a decade. Zoopla has now confirmed it is recording the highest number of homes listed for sale for over a decade. Some streets in the southeast now have 3, 4, even 5 for sale signs, visible from a single front door. Average time to sell has stretched past 60 days in the worst affected suburbs, while in northern hotspots, it sits at just 14 to 19 days. The official land registry data for February 2026 confirms that house prices fell in London, the southeast and the southwest, with London recording the largest month-on-month drop at 1.9%. HMRC data shows transactions are down 6% from 2025. This isn't a slowdown. This is supply meeting collapsing demand at exactly the wrong moment. And the trigger? A perfect storm. The Renters' Rights Act forcing landlords to sell up. The Iran war pushing 2-year fixed mortgage rates from 4.84% on March 1st to a peak of 5.9% by April 7th. Stamp duty surcharges crushing second home demand. The non-dom tax exodus emptying prime London. Boomers downsizing en masse. And buyers, completely overwhelmed, simply sitting on the sidelines waiting for prices to fall further. We've spent days analysing Zoopla's 2026 market rankings, ONS land registry data, Rightmove's house price index, and regional property reports to identify the 15 UK suburbs where this oversupply is most acute. These are the streets where every house is for sale, where sellers are slashing prices, and where the next 12 months will reveal exactly what happens when too many sellers meet too few buyers. But before we get into it, if you live in any of these areas, if you're thinking of selling, or if you're a buyer wondering whether 2026 is finally your year, hit that subscribe button right now. We're British Front Media, and the big estate agents won't tell you any of this honestly because their entire business model depends on transactions happening at high prices. We have you. Every subscriber, every share, every comment forces the truth higher up the algorithm, so subscribe. Drop a comment with your suburb. Let's expose what's really happening. Number 15. Bromley, Southeast London. Bromley was once one of the most consistently performing London suburbs. Now it sits firmly in the bottom rankings of Zoopla's 2026 housing market rankings with stretched affordability and visible oversupply. Streets across Beckenham, Orpington and central Bromley now have multiple long-standing listings, and sellers are accepting offers significantly below asking just to move chains forward. Number 14. Croydon, South London. A massive borough with serious oversupply. Croydon was the focus of huge buy-to-let activity in 2019 to 2022, and now those same landlords are unloading flats en masse under the Renters' Rights Act pressure. The result is a flat market in central Croydon, where supply of flats has risen sharply ahead of agreed sales, a clear textbook oversupply signal. Time to sell stretches well past national averages. Number 13. Watford, Hertfordshire. Watford sits at the heart of the affected commuter belt where mortgage rate shocks are biting hardest. With over 1,500 mortgage products withdrawn from the UK market within 11 days of the Iran conflict starting, commuter towns like Watford have seen buyer inquiries fall off a cliff. Streets near Watford Junction have multiple homes sitting on the market for over 75 days. Number 12. St Albans, Hertfordshire. St Albans has been a poster child for DFL, down from London, buyer demand. That demand has now evaporated. With London's house prices recording the largest month-on-month drop at 1.9%, Londoners can no longer cash out at premium prices to fund a St Albans move. The result? Period homes priced at £750,000 plus are now sitting unsold for months, with sellers cutting £40,000 to £60,000 off, asking just to attract viewings. Number 11. Guildford, Surrey. Surrey's commuter town darling. With an average property price of £524,238, Guildford was already on the edge of affordability before the Iran war pushed mortgage rates above 5.5%. Now stretched buyers simply can't get the mortgage offers they need. Streets across Onslow Village, Merrow and Burpham now have multiple for sale boards visible from the same junction. Number 10. Tunbridge Wells, Kent. A historic spa town that was a pandemic-era boom location. Now Tunbridge Wells sits squarely in the southeast market that has recorded an annual fall in average house price. Streets across Southborough, Rusthall and Pembury have entire rows where multiple homes are listed simultaneously. Sellers are accepting offers 8 to 12% below, asking just to escape the rate environment. Number 9. Sevenoaks, Kent. Sevenoaks was always priced for the upper middle class commuter willing to pay £900,000 plus for a substantial family home. That buyer has vanished. With the Bank of England now potentially raising rates in 2026 rather than cutting them, the maths on a £4,500 a month mortgage simply doesn't work anymore. The town is full of for sale signs that have been up since autumn 2025. Number 8. Brentwood, Essex. Brentwood is on the Elizabeth line via Shenfield, which was supposed to insulate it from the southeast downturn. It hasn't. The combination of return to office mandates and mortgage rate shocks has crushed demand for the 4-bedroom family homes that defined Brentwood's market for 2 decades. Multiple streets across the CM13 and CM14 postcodes have visible oversupply. Number 7. Maidstone, Kent. A Kent commuter town that absorbed enormous London migration in 2021 to 2022. Now those same buyers are trying to sell, and there are too many of them at once. Average time to sell across Maidstone has stretched well past 50 days, double the level seen in the fastest northern markets like Manchester and Carlisle. Number 6. Reading, Berkshire. We covered Reading earlier as one of the falling cities, but the impact on its surrounding suburbs is even worse. The Thames Valley Tech Corridor that powered Reading's property market has been choked by mortgage rates that have made Reading's £400,000 average property effectively unaffordable for its target professional buyer. Suburbs like Caversham, Tilehurst and Earley now have unprecedented for-sale inventory. Number 5. Bournemouth, Dorset. Bournemouth has been one of the most consistently falling locations in every major property index. Suburbs across Westbourne, Charminster and Boscombe, once considered safe retirement and second home territory, are now full of homes priced 10 to 12% below where they would have sold in 2024. The second home tax surcharge has pushed out an entire investor class, and the resulting supply has nowhere to go. Number 4. Worthing, West Sussex. Worthing's WO postcode area has been recording some of the steepest annual price falls in the entire UK. Suburbs across Goring, Tarring and Salvington have entire streets where multiple Edwardian and 1930s family homes are listed simultaneously. Sellers are stuck competing against each other in a buyer's market that's getting more aggressive every month. Number 3. Brighton and Hove, East Sussex. We covered Brighton's 3.2% annual fall earlier, but the suburbs are bleeding worse than the city centre. Streets across Hove, Portslade and Kemp Town, the suburbs that powered Brighton's 2020 to 2022 boom, are now drowning in unsold flats. Flats in Brighton have collapsed 5% in a single year, and the supply of small 1 and 2 bedroom properties hitting the market is the highest in over a decade. Number 2. Esher and Cobham, Surrey. 2 suburbs that defined Surrey luxury for 20 years. With 4-bedroom homes typically starting at around £900,000 and 5-bedroom rural homes from £1.25 million, the entire price band has been priced out by the new mortgage environment. Streets across Oxshott, Stoke Dabenham and Claygate have multiple 7-figure homes sitting on the market for over 90 days. The premium Surrey commuter belt is in genuine retreat. Number 1. Westminster, Kensington and Chelsea, prime central London, and the worst affected suburb area in the entire United Kingdom is the heart of the capital. We've established already that Westminster home values have crashed 12.7% in a single year, but the suburb-level data tells the brutal story behind the headline. Streets across Pimlico, Belgravia, South Kensington and Earl's Court now have multiple flats listed simultaneously, with former rental properties accounting for 30% of all new sale instructions in London. Non-dom tax changes have caused entire mansion blocks to empty out. The Iran war has frightened off Middle Eastern capital. Russian and Chinese buyers have largely disappeared. and the new owner-occupier market simply isn't deep enough to absorb the supply at current prices. Walk down a single street in Pimlico right now and you will count more for sale signs than at any time in the past 25 years. Why this is happening, and why it gets worse before it gets better. The drivers are layered and reinforcing. First, the Renters' Rights Act forcing around 700 former rental properties onto the sales market every single day. Second, the Iran war pushing swap rates and mortgage rates higher in a matter of weeks. Third, the Bank of England holding rates at 3.75%, with traders now predicting 2 hikes in 2026 rather than the cuts the market expected. Fourth, the stamp duty surcharge on second properties, in force since October 2024. Fifth, the 5.2 million households now facing mortgage payment increases by 2028. And sixth, the slow capitulation of Southern English homeowners, realizing they can no longer hold out for 2022 prices. What this means for you. If you own in any of these 15 suburbs, the data suggests 3 options. First, if you must sell, price aggressively now. The longer you wait, the bigger the discount you'll be forced to accept. Zoopla's analysis confirms that well-priced homes are still selling, but homes priced for the 2022 market will rot on the listings. Second, if you can hold. The Southern English market is unlikely to fall much further than current levels because the underlying demand for these areas remains structurally strong. Schools, transport links, and high-paying London jobs aren't going anywhere. Third, if you're buying, this is the best leverage environment in 15 years. Sellers in Bournemouth, Worthing, and Outer Surrey are accepting 10 to 12% below asking. Use it. If you're not in one of these 15 suburbs, watch your local market carefully. The exact same supply and demand dynamics are spreading. Anywhere with a buy-to-let heavy housing stock, anywhere with a high concentration of commuters, and anywhere where the average mortgage size exceeds £300,000 is at risk of joining this list within 12 months. If this video changed how you see the UK property market, hit that subscribe button one more time. Drop a comment telling us your suburb and how many for sale signs you can count on your street. And subscribe to British Front Media because we're doing this every single week. New investigation, new exposé, new truth. The property industry doesn't want you to hear. Until next time, read the data, question the headlines, and protect your home.